Welcome to the Doe Show, everybody. Happy Monday. Hope you're having a good day so far. This week, by the way, on the Doe Show, we're talking about trading. And just so you know, a heads up here, I am a financial advisor with Jazz Wealth Managers. We are long-term investors. We are not day traders, short-term traders, active traders with your retirement accounts. We are very much long-term. However, a lot of our customers are traders, and we do a lot of classes to try to help them out, given that I have a little bit of a background in trading. But just so you know, we are not talking about your long-term accounts this week. I will mention that every day just so we get the point clear. We're financial advisors. We manage our own portfolios. They're posted on our website so you can see the performance. We are SEC registered fiduciary advisors. That's a mouthful. And we hope you'll check us out there at Jazz Wealth. Well, anyways, a lot of our customers are active traders on their own. We manage their retirement accounts, but they're active traders, and come to find out, a lot more of you are actually trading in your personal wealth accounts, that's what we call it, than I thought, right? So, I mean, I know a lot of you, and I know your backgrounds, but I come to find out there's quite a few of you that are trading. After the markets just fell last week, I got some of you to come out of the woodwork. So, here's what I want to know. Are you an active trader, whether you're one of our customers or not? You're just maybe someone that likes watching our videos. Do you invest for retirement, but also maybe you trade actively in a separate account, or how does that go? Let me know. Leave a comment down below. Let me know if you're an active trader, or if you just like to trade every now and then just to stay engaged. I like that as well. Well, today we're going to talk about, as far as trading, we're going to talk about trading plans, okay? Like I said, I've taught thousands of people all over the world, Singapore, Israel, Portugal, of course the US, to how to trade, right? I've watched them trade live in front of me. I have traded myself right in front of them to show them what to buy and when to buy it. It's something I'm very passionate about, still do to this day, but I can't really bring it in the way I'd like to with this business. So one day I'll try to figure it out how we can do it legally. But anyways, after teaching all of these people, one of the things that we used to focus on was trading plans. And believe it or not, we used to do, for our customers, we used to do a class that was 2 days long, 8 hours a day, almost solely on trading plans. Because this is a business. If you are going to trade and you are just buying and selling whatever you want, those days are over of you making money. I'm telling you right now, you have had like the last 7 years, there was a little volatility 8 years ago and 9 years ago, not a little, a lot. But for the last 7 years, you buy whatever you want, give it enough time and you made a profit. You could do that without a plan, and I'm telling you, those days are over for at least the next couple years. So you have to have a trading plan. Now, why do we have a trading plan, and what in the world is it? The first thing is to take out emotion. So when you sit down to trade, whether it's once a day, once a week, 5 times a day, 5 times a week, whatever it is, you need a plan, right? You are going up against the smartest guys on the planet. You are going into a stock market where people have spent many, many, many more hours, years, and probably decades getting better than you, and you're going to give them your money? You better have a plan when they come swinging for your money, how to pull it back, how to give them more, right? You better have a plan. So the first thing is, you can't just sign up for an app somewhere and go, I'm a trader. Here we go. I'm going to buy something. I'm going to sell something. It's going to be great, right? You need a plan, okay? So we need it for emotion, right? You got to get rid of the emotion from trading. And last week, you guys got to see the emotion in trading, right? You got to see that when the stock market falls, if you had trades on and you didn't know what you were going to do with them, you got emotional, didn't you? I got a few emails. I saw you guys. So we want to get rid of the emotion by having a plan. Just like in business, just like in life, your personal finances and your trading, you want to get rid of the emotion if possible so you're free and clear to make the decisions you need to make. All right, next thing is you're going to measure, right? You have a trading plan so that you can measure whether you're any good or not. Now, Thursday, what did I put down here? Thursday, we're going to do all performance, right? I'm a stats guy. You guys know from watching. If you're one of our customers, you know from the things that I share with you, I like stats. And I like to track every single stat in trading possible. Just the fact that you bought and sold for a profit does not count. You need to know what you bought, what strategy it was, what time of the day, week, and month it was. You need to know what your risk was relative to your reward. You need to know what your batting average is and how much you made relative to what you risked. So there's a lot going on there. Now, Measuring the success of your strategy is key. You have a strategy. The trading plan will include one of those strategies, and that's something that you want to include for sure. So these are two real big reasons you want to have a trading plan, because was it Mike Tyson that said everybody has a plan until they get punched in the face? Well, if your plan is up here and you go trading and then you get smacked, right, from the stock market, you all of a sudden don't have a plan anymore. You realize what you don't have. So here's what we're going to do. In your trading plan, you are going to define what it is that you do. Now, I have seen literally thousands of trading plans physically in person, online and in person from all of our students in the past, and I've seen them everywhere from 50 pages long to just one sheet. Right? Some people get really detailed about how they're going to wake up in the morning, what they're going to do, what they're going to look for before they go to work, if they're an active trader, how they're going to handle severe downside, severe upside, what are they going to do. You're essentially going to define what you're going to do. It's no different than when you sit down and create a budget. A budget is a plan, right? So, what are some of the things you want to put in your trading plan? Now think about this, because I know a lot of you are very new to investing and trading in general. So what are you looking for? So that's the first thing. How are we defining your strategy? What is it that makes you pull the trigger to buy or sell something? Is it that you saw it on TV? That's an acceptable answer. You saw a stock on TV and therefore you saw something positive about it and you bought it. Believe it or not, that's an acceptable answer. Is it that you were doing research and you found some article that was positive and you bought it? That's acceptable as well. Is it that you use the charts? You know how on the closing beat we use the charts and I'll go through and say, look where it's at and this is what may happen? That's acceptable. Is it the fundamental analysis? The company had earnings and they expect better earnings, whatever it may be. Of course, that's acceptable. Is it that the stock gapped up or down? That's acceptable. ATVI today, I believe ATVI gapped down. You got Apple gapping down maybe. You got a lot of stocks that just gap up and down each day. That's an acceptable reason. So first and foremost, what is it that you're looking for? And this is going to start to define your strategy, okay? When you find what you're looking for in very, very simple terms, what are you going to do with it? Right? So you found that gapping stock, you found that breakout trade, you found the news article, the people on TV or some analyst that you follow. You found a symbol that you're interested in. Now what are you going to do? Are you going to buy it now? Are you going to put it on a watch list? Are you going to wait for something special to happen? Are you going to wait for it to fall to buy it at a discount? Are you going to try to buy it on the way up and join everybody along the way? This is where you want to define this. I'm very serious about this. You have to write this down, right? You have to have a plan for this, okay? Now, when you decide what you're going to do, how much are you going to risk? This one right here, we're about to go into the trading plan part that most people never have. How much money are you going to risk on that particular trade or investment or whatever it may be? Meaning, if you're going to buy, this is tricky now, if you're going to buy 100 shares of the stock and the stock drops by $3, you're risking $300. Are you willing to accept that? When I say risk, let's say the stock is doing something like this, and you decide your entry point is here for 100 shares, and then it drops to down, $1.50. You're down $150. Are you cool with that? Or are you willing to let it drop $300 against you, $400, $10, $1,000, whatever it is? You're going to define your risk ahead of time. Now, this requires a little thought. Because if you are willing to let the stock move $300 against you, how far is that? Is that too much? Is that too far? Right? What happens if the stock moves 10 cents a day? And that's the average movement of the stock. And you decide, I'm going to buy 100 shares right here. And if at any point I am down $300, I will get out. And so you say, okay, I'm going to sit there and hold it. If at any point the stock falls and my P&L shows minus 300, I will get out. That is a ridiculous amount of money to risk on a particular trade when the stock only moves 10 cents a day, if that were the case. Okay? That means you're waiting for a stock for days and days and days, possibly weeks and years, for it to move down $3 to admit defeat. And so what that means in that case is you are not, that's 100 shares. In that case, you are not going to buy 100 shares. you may end up buying 1,000 shares of that stock. And then when it falls 30 cents, you'll get out, right? Maybe that's a more realistic thing because the stock only moves 10 cents at a little blip at a time. Even on a bad day, it has a 20-cent drop. So you may figure out this stock doesn't need $3 worth of wiggle room. That is an art, by the way, to be able to do that. So in this case, how much are you going to risk with the stock that you found? And you know what you're going to do with it. How much are you going to risk? Now it might be 1,000 shares, okay? So you want to start with that. Think about what you're going to do there. So many people go, I bought some more, I bought a little more, it went lower, I bought some more, it went higher, I bought some more. But you don't know what you're going to do there. Now that's for a short-term trade. It could also be that you say, I will let it move, 4% against me. The average daily move for this particular stock may be 1.5%, and you use some multiple of that. And you say, well, I'll tell you what, if it moves 3 times the 1.5% that it normally moves against me, I'll take that as a sign that something's wrong and I'll get out, okay? It can also be that you use a technical area on a chart. You could look for prior support if you like looking at that stuff. You could use indicators to tell you when a stock is now overbought, and maybe that's when you will decide to get out, okay? How much will you risk? That's a big one. The next thing that comes is your goal. And this can all be bullet points right on a sheet of paper. What am I looking for? I am looking for whatever. What am I going to do when I find it? I'm going to trade it. But in particular, that means I'm going to put it on a watch list and wait for a certain event to happen, or wait for a certain price or pullback or rally, whatever it is. When I do find that, I am going to risk so much money per trade. I'm going to risk a percentage of my account, 1%, 2%, whatever it may be. I'm going to make that decision that way ahead of time, so that I don't get wrapped up in the news and go, well, everybody's talking about Bitcoin, so maybe I'll risk 10% of my account. Don't do it. And now I'm going to have a goal. This one's huge because what did we just do? We just set a floor for a loss. We already know what we're risking, so there's no emotion. If the stock falls, you already agreed to lose that much money. But now, where's your target going to be? Where are you going to sell on the way up? This has to be defined too. Here's fear, here's greed. Solve both of those problems, then you might have a winning strategy, right? And I'll explain in a second. So you've got your loss figured out. If everything goes according to plan, think about it. If you have a winning trade, you didn't do anything. You're not a hero. You didn't do anything special. You bought something that appreciated in value. You didn't have to physically work for it. You didn't have to stare at it every day. It just went to where you wanted it to go. Down here, this is going to hurt a little bit, but you limited your loss. So when this goes to a target, most people go, I didn't do anything. I bought, it went up. Maybe it'll go further, right? So you've got to decide what that target's going to be ahead of time. If the stock is currently trading at $25, I don't know what stock that would be, but if it's trading at $25 and you say, I'm going to sell it at 31, then you better sell it at 31. If that is the goal ahead of time, then do it. Now, the goal can be to sell half at 31, half at 33, or whatever it may be, but that comes down to your trading plan. You're going to define what your goal is. Every time I take a trade, I put an initial stop loss at some point. I shoot for a target at some point. It better be more than your stop loss, by the way. And then I sell half of it, and I'll sell another half if it goes to some other point. And then it may be, once I take my first profit target, once I hit the first profit target, I raise my stop loss to break even. That way I can't lose on the remaining half while I sit and chase more. Did you guys get that one right there? So if you buy it at 25, and let's say your stop loss is 20 for some reason, right? The stock goes to 31 and you sell half. At the exact same point that you sell half, your new stop loss may become break even while you wait for the other half to go higher. And the other half could wiggle around and do all this thing for a while, but eventually go to your target and maybe it hits your stop loss, but you lose nothing. And so these are all little things that you can do that you'll start to figure out only because you have a plan. You would never think of this if you're just buying and selling whatever it is you want. You'd be too wrapped up in the trade. What's the news article say? What does Twitter say about this? Dustin, what do you think about the stock? Really? It doesn't matter what I think about a stock. When I trade, every day, when I trade, I don't care, right? Like I buy something, if it goes to the profit target, a couple high fives around the office, no problem. If it goes to the stop loss, no problem. we've already got it figured out. You can't kill me. You can't erase my account all in one day. We've already got it figured out. Okay, so that's your goal. You want to know what your goal is going to be. You've obviously defined what your loss is going to be. Now, this is really important because part of a trading plan is, like we said, to measure success. You are going to build a trading plan, find everything you're looking for, then you're going to implement that trading plan. So it goes like this. You're going to build a plan, figure out what's inside of that strategy, put it to work, measure success or failure, refine, start again, right? And you could insert little stops and starts along the way if you want. Build it, put it to work, track it, refine it, build it again, and go back to work, okay? So this is actually part of the sort of the same thing. These two go together. Once you build it, you're just going to refine. And that cycle continues again. And see, what I'm going to share with you on Thursday, the stats tracking thing that I like to use and that I've used for students in the past, will track everything. You need to know how successful or how much room you have for growth there is. Because here's a great thing. I just went over this with someone the other day. If you're a day trader, let's say you're a day trader, and you'll do 4 or 5 trades a day, I don't know, right? And you get 50% of those day trades correct. Are you a profitable trader? Are you a break-even trader? Or are you a losing trader? So you have 50% losses. I'll use the color since we have them today. And you have 50% winners. If at the end of every day you took 10 trades, 5 were correct, 5 were wrong, did you make money? The answer is some people killed it, meaning they made a lot of money. I'll give you a great example. I'm going to tell on Friday my favorite trading stories of friends, myself, and things that I've kind of come across over the years. I'm going to tell my favorite stories. One of them is going to be about a trader who makes less than 50%. They have a less than a 50% batting average. You can get half the trades right and still kill it and have a great living. The one that we're going to tell a story about, a friend of mine, he has a 31%. I did it backwards. He does it backwards. He has a 31% win rate. The rest, come on now. The rest is all losers, right? So he only wins 31% of the time, but this is what I wanted to show. How much does he win? He wins 3.8 times what he loses, right? That's profitable. So figure that out. If you're 50-50 and your win-loss ratio is 1, you're break even, right? If your win-loss ratio is 2, you're making a profit, even though you lose on 50% of the trades. And we're going to go through this, what day was that? Thursday, right? So you need to know, the point of today is to say you need to know how you're doing. You will not make it. I promise you, all of you that are using those little apps, Robinhood and stuff, where you just buy and sell, if you're not tracking it, you will lose in the long run. It's a mathematical fact that you will lose. It's just not going to work. You have to track what you're doing. You've got to have the strategy, put it to work, then measure it. If this trading plan has 5 strategies in it, then you're going to put those 5 to work, measure all 5 of them, and refine all 5 of them. It's a lot of work. If you have one strategy, Dustin, I look for breakout trades on a daily chart, and I follow only the ones that have 2 times average volume and are very near within 10% of all-time highs. There you go. There's a strategy that people actually use, right? They put it to work. They find that over the last few years, there's been plenty of them to choose from. They measure the success. It has been probably something very successful, I would imagine. Then they refine. How would you refine something that's very successful? You might risk more. You might choose to enter with smaller risk amounts, meaning your stop loss would be closer to your entry price, right? There's so many cool things that you can do with it only if you know the details. Like a business. I sell pencils, I sell pens, I sell bathing suits in Iowa. Do you think you're going to sell bathing suits at the same pace that you sell pens year round? Probably not, unless you're on Amazon and selling to people in Florida, right? So you would only know to do that if you were tracking what you were doing, right? If you sold many, many, many products, you just have no way to keep up with it, and no one's going to help you with it. So you got to have a trading plan in there. Now, some other things that people have in their trading plans is how to handle a string of losses. You may be 50-50 for a while. It may all of a sudden go against you, and you end up losing on 80% of the trades. I've been there. I have been there many times. So what do? Will you say, if I lose so much in a day, I quit? If I lose so much in a week, I will quit for the week? If it's Wednesday and I've already lost everything I want to lose for the week, will I stop? Will I go do something else? Will I mow the lawn, right? Will I try to turn the lights off at home because I'm a little nervous? I've been there. Everybody has to go through that. So you've got to understand how you're going to handle those losses if a bad string goes your way. Also, when will you increase your size? Let's say that over the next 3 months, you can tell me I have a 50-50 batting average, meaning I get half of them correct, and I win 1.9 times what I lose. When will you bet more? If you have a winning strategy and it shows consistency, why not bet as much as you can? Swing for the fences, right? We used to have these automated strategies, and I would have 12 of them, and they all ran against each other every day. And so one of the things we would do is we recognized that a couple of these strategies worked better on the first new move of a trend, meaning the stock was pulling back, and when the stock turned the corner, if we would go on that first day and that second day, we called the second day the first day to be fair. If we turned on these strategies on those days, they did much better. And so we let it run, we tracked it for a long time, and then we found out that the batting average and win-loss ratio were so good, why wouldn't we just bet as much as we could when that happened? And so on those days, we would shut everything else off, and we would turn those two, it was really two good ones, we would turn those two on and bump up the amount that we would risk. We were willing to lose much, much more on those days because the odds were greatly in our favor because we could measure it. If you can't measure it, then you're guessing, right? What's the best day to buy a breakout trade? You know, a stock that's basing sideways. If you're a technical trader, you know where I'm at, right? And then does this. What's the best day to buy that breakout? Do you know? It's not the first day, right? So if you know the day, then you say, maybe I'll nibble a little bit on the first day. The odds aren't in my favor on day one. If maybe day two is the better day, that's why I'm diving in. I'll go 100% because the odds are I'm not going to lose very often. So it's a big deal there. And lastly, Robert, revenge trading. Absolutely. Revenge trading. I will be sharing some great stories on Friday for that. Now, for the rest of the week, tomorrow we're going to talk about your trading options, your products that you have to choose from, and the style in which you'll trade them. Wednesday, we're going to talk about leverage. Thursday, tracking performance. And Friday, I'll share with you some of my favorite trading stories. Some good, some like inspiring that of times of lots of money and other times of near collapse. So you'll get a feel for what it's like to be a trader. They're not all from me personally, but man, I've seen some really, really good things there. So anyways, Brianna likes to trade weekly. I love it, right? That's cool. Castillo, hey, he's working towards being more active. I love it. Even if it's just a little bit, it keeps you engaged. However, you want to know that what little bit you're doing is making a difference. So don't just randomly buy something. You know what I mean? Track it. Why did you buy it? If you bought it because you saw it somewhere, that's acceptable, but we want to measure how successful that is so that you know whether you need to continue doing that or not. You're trying to learn how to trade GE. That's a horrible, horrible, horrible stock to learn how to trade on. Sorry, Edison. You bought 10 shares of Facebook by accident at 153. So a trading plan will also include something like that. It happens where you think you're placing your stop limit order, but really it goes through right away and you end up buying something. I still do it. It happens. But you got to know what you're going to do when that happens. When that happens, you reverse the trade, call the brokerage firm if you're with a brokerage firm and say, can I get a freebie on this one? I made a mistake. I'm sorry. A lot of times they'll just give you your money back. Commission back, not your money back. Yeah, Bruce has got it. Well, I know what Bruce is doing. So, yeah, if you're going to risk $100 on a trade, just as an example, your profit target better at least be the $100. So you're risking 100 to make 100, right? It better at least be that. And then if it's risking 100 to make 100, you know that you have to win more than 50% of the time. You really should be winning more like 80% of the time to make it worth it. But if you win more than 50% of the time, technically that's profitable. So you can see how quickly you want to have 3 times, 4 times. You want some big profit amount overall, net profit amount relative to your risk, so that you don't have to win as much. Right? It's tricky. It's tricky to trade. Hey, financial investor, love it. You usually try to make a move of sorts at least once a week. Cool, nice. Uh-oh, gains reset, back to flat. Swinging for the fence. I love it. Okay, cool. So that's a test. Now look, I want to know in the comments. Let me know if, I could change what we're doing this week. We could talk about something else. If you guys are trading, however actively, whether it's once a month or once a day or 10 times a day, I don't care. If it makes sense to you for us to continue, I'll go down this path and we'll talk about all of it. But let me know. I want to know if you are trading, and how are you trading? Are you a Robinhood trader? Do you have a standard brokerage account? Are you trading at TD, Interactive Brokers, whatever it may be? Are you running an automated system? Are you physically doing it? Are you short term? Are you long term? And how have you done? Right? Good, bad, or ugly? Let me know. Again, the goal is we're not talking about long-term investing here, so nobody's talking about the S&P 500. We're not playing that game right now. We're just talking about active trading. So if it helps you, we'll keep going down this path. Let me know in the comments below. It looks like it's that time. Back to work. We'll see you at 5 o'clock for the closing beat. And hey, if I can help you in any way, you know where to find us. Talk to you later.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.